right, what's up everybody? This is Ferris with Trade with Tex. I wanted to make a quick video on time frames and really how to chart different stocks on different time frames, things like that, for day trading and swing trading. So regardless of what time frame you're investing on, whether you're holding for 2 minutes or whether you're holding for 2 days, these are two time frames that I use to apply all of my technical analysis to. Okay, so I mainly use two time frames. I'll explain to you what they are and why I use them. But on top of that, I want to give you a little bit of an intro to time frames to kind of show you how they work and why you should just use a select few. Okay. Now, first things first, before we get into my favorite time frames, I want to say that there isn't one set of, time frames or one specific time frame that you should use for every single little thing. It really caters to the investor themselves and what their average holding period is, what kind of patterns you trade, if you trade any patterns for starters, and really why it is you're investing in the first place. So for me, right, I'm a short-term investor. I do have long-term investments, but I mainly use fundamentals for those. Well, a combination of fundamental and technical analysis. But for my intermediate to short-term trades, I'm usually holding for either 30 minutes to an hour, or I'm holding for 2 to 3 days. And the reason why this is important is because if you're holding something for a couple of minutes, or if you're holding something for a few weeks, you're not going to be using the 1 minute time frame, right? That doesn't make any damn sense. You're going to be using something that caters to your investment style. So mainly for trades that I'm using for day trades, I'm going to be referring to the hourly time frame, right? Also known as the 60-minute, whatever you prefer. That is the 20-day 1 hour. And then for my swing trades and really just bigger picture investments, I'm using the 1 year, 1 day, or the daily. Okay, I'm in the TD Thinkorswim platform, by the way, but at the top of your chart, whatever platform you're using, you should have a little drop down with a time interval on it. And a list of favorites or go-tos that you use regularly. Okay, I do use other time frames because not one time frame tells the full story, but these are my two go-tos that paint a good picture of the trend and key levels, right? Support and resistance and the trend. Those are the two things I really want to tackle on both of these time frames today. But let's jump into it. Some of you guys are probably thinking, what the hell is a time frame? And some of you guys probably already have your own that you use regularly, but I highly recommend trying some new, aka these, because I find them very useful. Now, time frames are often mistaken based off of the time period and the time interval. So we talked about the 20-day 1 hour, and I erased that too, the 20-day 1 hour, and the 1 year, 1 day. And when I referred to this, I called it the hourly, right? The first time frame here. Reason being is that's the time interval. Okay, so if I say I'm referring to the 1 hour time frame, that's not a time period of an hour. That's a bigger time period, in this case 20 days. All right, so let me show you what the hourly for Facebook looks like. So this is the past 20 days. Okay, and each candle or bar, whatever you're using on this chart, represents a 1 hour time period. Okay, so again, full time period of 20 days, time interval of 1 hour, that's the hourly. Okay, the most common misconception that I see is I refer to the daily chart, and people think I'm talking about the intraday chart. When I'm saying daily chart, I'm referring to the 1 year, 1 day. And again, I'm using the interval to discuss the analysis there. So if I'm saying daily, usually the interval on it is going to be 1 day. So each candle represents 1 day on this chart, and 1 year in trading days is technically 252 days, typically, depending on what kind of holidays we have that year. So it's not 365. That would be the common misconception. But when I'm talking about the daily chart, I'm talking about 1 year time period and 1 day intervals for those candles. Okay. Now, the reason I use these two are because they give me a good read on trend analysis and overall support and resistance. And that's kind of how I want to separate this discussion here. We're going to start it off with the daily chart, so the 1 year, 1 day. Okay, so trend analysis, support and resistance. Reason I want to start out with this time frame is because it's pretty widely used. It's kind of a go-to for a lot of traders, and that's because your typical trader isn't actively scalping during the day. They're not high frequency traders. They're usually holding for 2 to 3 days or 2 to 3 weeks. But I use this daily chart for all of my trades. I always check the daily chart. Now, if you don't have it up, I do think it's a default in almost every go-to platform. But if you don't, click on that little number or letter that's up here, right? Mine says D for 1 year, 1 day. Go to customize list. Okay. Add or edit time frame, right? If you want to have just a go-to one, by all means. You can see the ones that I commonly use here. And you would hit add time frame. It's already set to daily, so 1 year, 1 day. Let's say I wanted to do the 3 year, 1 week, the weekly, which is another one I commonly use. I would go 3 years, time interval, and then aggregation period is the week. Okay, and then I would hit OK so that I could check it. But for the most part, right, on the 1 year, 1 day, what we're talking about is just day-to-day price action. And also trying to grasp the big picture here. So basic trend analysis that I use, for example, is looking at the 8 EMA on the daily. Pretty much what this says is that the direction of the EMA or the price in comparison to the direction of that EMA should dictate the trend here. So very basic read on Facebook. Let's add the exponential moving average to this study set. And all I did was go studies, edit studies. And I'm going to click here and go exponential. If this is too fast for you, you can pause the video and just rewind and do it again. I'm going to make it a little bit thicker and I'm going to make it pink. Okay, so 8 length EMA, made the width a little bit bigger and made it pink so it sticks out. All right, so moving average exponential, applied it. And you could see that Facebook today crossed over that 8 EMA, okay, and started to break out a little bit. And that's just a very basic read of the daily trend. So if we were to zoom this out a little bit, okay, you can see that during this downtrend for Facebook, the EMA was pointing downward, that pink line. When the price was below it, it was relatively weak. When the price was above it, you wanted to avoid shorting it. Okay, very simple read of the trend. But the overall direction here, since the 8 EMA is pointing downward, is a downtrend. Okay, now as for support and resistance, the only thing I really want to cover here for support and resistance on the daily chart is just fibs. Because there are a couple of more levels that we take into account, like the 200-day SMA or the 50-day SMA. But Fibonacci retracements are one of our most commonly used tools in the chat room for day trades and swing trades. So if you just draw your fibs the way we do in all those videos, and if you have no idea what the hell I just did, that's fine. We have like 4 or 5 videos on Fibonacci retracements. They just give you support and resistance levels. So I just have the daily time frame up, right? And I just drew my Fibonacci retracements here. I'm going to make sure I got them right. So I'm going to double click that and type in the levels. So I just drew it from the 52-week high to the 52-week low. And you can see now I have a list of, quite a few support and resistance levels to use on this chart. Okay, so you can see if we zoom in on Facebook, right? Right here it bounced off of this Fibonacci retracement, and that could have been a good entry point for a swing trade, right? Very simple, key level analysis there. All right, and you can see what acted as resistance here. It got rejected once and then twice after earnings at that 50% Fibonacci retracement. So again, I'm not going to go over exactly how they're drawn, exactly how they're used. We got plenty of videos on that, but the daily fibs work like a charm, okay? And they're great for entry and exit points, okay? So basic 2 things that I look at on every single time frame, and we're just going over 2 time frames, the daily and the hourly. Trend analysis, and for this time frame, I use the 8 EMA, okay? If it's pointing upward, it's in an uptrend. If it's pointing downward, it's in a downtrend. You can see now it's starting to uptrend, but it's been relatively flat lately. And then support and resistance, I just use those Fibonacci retracements. Okay, now for the hourly, I actually do the same exact thing except with different moving averages. So if you bear with me, I'm just going to load up a quick study set. This just has my go to technical indicators on it. And I'm going to take a lot of these things off of this chart. All right, so I paused the recording and then resumed it here so I could save you guys some viewing time and just save you time from watching me click around. But the two things, again, that I'm looking at for every time frame, trend and support and resistance. So for trend analysis on the hourly time frame, again, that's the 20-day, 1 hour, I'm using the 20 and 50 SMAs. Very commonly used SMAs, nothing too complicated about them. And all I'm doing is I'm reading how they are acting, right, in general, just compared to one another. So the 20 SMA is in blue and the 50 SMA is in green. So if the 20 is above the 50, we're in an uptrend. If the 20 is below the 50, we're in a downtrend. Okay, so for example, if you look at this price action here for Facebook, you can kind of see that the 20, that blue line, is below the 50, right? So we are currently in a downward trend. All right, it's actually just as simple as that. With the 20 crossing above the 50 right here, we're shifting to an upward trend. Okay, so downward trend, shifting to an upward trend right here. All right, now for key levels, it works the same way, right? Let's draw the fibs to this chart. We're just gonna go left to right, same way that we do in those other videos. Again, if you have not seen those, just go to the Trade with Tex YouTube channel and look at the Fibonacci retracement videos. Okay, so I drew left to right, high to low in this case. All this is doing is giving us support and resistance, and I'm going to put these in orange so you can see how these key levels work differently. Okay, now again, this is more useful for day trades or even just 30-minute to 1 hour trades. If we look at this Facebook bounce recently, you can see that it's just going key level to key level, right? And I think today's action was a perfect example of that. I did catch a short on Facebook today with some puts, right? It's just a very basic options trade. And as you can see, right, it ran up, bumped into this fib resistance, and then came down to the next one. So that right there, even though it's just $1.50 per share, is enough downside for you to take a short, okay, for you to short sell this stock. Again, using just those key levels, when it reclaimed this Fibonacci retracement, it ran up to the next one. Okay, when it held this Fibonacci retracement, it immediately ran up to the next one. So right there, you're looking at about $3 per share just using those Fibonacci retracements on the hourly time frame. Okay, so a very quick review here on these time frames and specifically how they're used. Again, I want to keep this webinar short and sweet. I don't want to use too much of your time because frankly, I think time frames are something that everybody should already have in place. And if you don't, all you need is the actual time frames themselves, and then you just need to practice on them. So in this case, right, again, we're talking about the hourly time frame, which is the 20-day 1 hour. Make sure you get that set up. That's a concrete step to move forward after this webinar. And then on top of that, what we're doing is just doing basic trend analysis. All right, and support and resistance. In this case, for the hourly time frame, I'm using fibs for my key levels, and then I'm using the 20 and 50 SMA. For trend analysis. Okay. And then for the daily time frame, which is the 1 year, 1 day, I'm doing the same exact thing, but the only difference here is I'm using the 8 EMA for my trend analysis. If it's pointed upward, then it's in a bullish trend. If it's pointed downward, it's in a bearish trend. And if it's pointed sideways, there's no trend. Okay, and support and resistance is still using those fibs. All right, so again, I see a lot of people misinterpret time frames and use one that isn't necessarily wrong, but doesn't fit their investment objectives, right? If you are holding a stock for a week, why are you looking at the 1 minute? Okay, best tip that I can give you though, just to sum things up and keep it as simple as possible, you want to keep your charts as simple as possible. So establish go-to time frames and try to keep an eye on the bigger picture. One of the biggest problems that you'll have, especially not only starting out, but even if you start building up your portfolio and building up your wealth, is you kind of put everything under a microscope and you overanalyze. If you keep it simple and look at the bigger picture and look at a bigger time frame, then you get a much better idea of where there's support and resistance, and you get a much better idea of where you should be buying and selling. Okay, so obviously buy off of support, sell off of resistance, and then try to follow the trend. All right, hopefully this helps some of you guys out. Again, it was in the TD Thinkorswim platform, but it applies to all platforms that you're using for stock charts. And if you have any questions or a time frame that you like using that I don't currently have up here, then feel free to mention in the comments below. All right, but I appreciate your time, guys. Hopefully this will help you with your day trades and swing trades. And if you enjoyed the video, make sure to like and subscribe. All right, have a good one, folks.